Rest.
Good morning. Welcome to AmericaFirst Wealth Management Investment Outlook for November 18th, 2024. My name is Dan Liu. I'm the Chief Investment Officer and Portfolio Manager at AmericaFirst. So this is our standard disclaimer that we like to show. We're not offering any specific investment advice here or recommendations, or neither are we offering to purchase or sell any securities. So these are our opinions as of November 18th, 2024, and subject to change without notice as market conditions can and will change. So we like to begin with our market outlook, and this week will be particularly brief because we think there's only one important signal that matters this week, and we'll get to that shortly. In terms of what happened last week, the markets and ourselves, we are questioning, is the Trump election victory rally over? And certainly last week, markets were assessing his cabinet picks, in particular, Matt Gaetz for Attorney General and Robert F. Kennedy Jr. for head of HHS. Also last week, that was significant, Fed Chairman Jerome Powell said last Thursday, the economy is not sending any signals that we need to be in a hurry to lower rates. The strength we are currently seeing in the economy gives us the ability to approach our decisions carefully. Translation, don't expect rates to be dropping quickly anytime soon, particularly the upcoming December Fed meeting. He's basically signaling that likely to be no action or pause. Clearly, the economic data is strong and inflation is still stubbornly above the 2% core inflation target that the Fed's trying to reach. So the Fed is in no hurry to cut rates further. Also, during the weekend, we saw a large drone and missile attack from Russia to Ukraine, and Biden authorized Ukraine to use U.S. long-range missiles to strike inside Russia. And that is causing some fear and trepidation among the markets because Putin has said such escalations would be considered by Russia as an act of war. But all politics and macro information aside, we think that the most important data point this week for the markets will be specifically from NVIDIA and their earnings, which are being reported on Wednesday after the close, looking for consensus earnings of 75 cents and revenues of 33.1 billion. Key macro data points this week. Tuesday, we had 8:30 a.m. building permits. Wednesday, we have crude oil data. Thursday, the important initial jobless claims and Philly Fed manufacturing, and existing home sales on Thursday. So Thursday seems to be the big day for macro data points. And Friday morning, we have the S&P Global Composite PMI flash, which would also be something we want to focus on. So we have one of the interesting pictures of the weekend was President Biden attend the Asia Pacific Economic Conference, and they put him for the group photo in the back, all the way in the back on the right. Normally, the leader of the most powerful nation in the world should be up front and center, but obviously you have President Xi Jinping up there in the front, and right next to the host country president. So sticking Biden in the back clearly illustrates to the world that he is less important here and is more of a lame duck until the end of his presidency. So that being said, his comments on authorizing Ukraine to use long-range missiles is kind of contradictory, whether or not people will take his comments seriously and Ukraine follows suit. I mean, hopefully it's just more of a comment than an actual go ahead and shoot missiles into Russia, which would unfortunately trigger a potential start of World War III, which is nothing the markets want to look at right now. Contrasting the lame duck photo of Biden at APEC, Trump and his cabinet victoriously entered UFC 309 in Madison Square Garden, returning there after his successful rally before the elections to a standing ovation crowd at Madison Square Garden. So very dramatic picture there. I thought I'd show it to our audience because it was definitely two contrasting events that occurred over the weekend. Turning to the market stats for the week, as I mentioned, the Trump election rally possibly could be over with markets selling off dramatically as investors are assessing Trump's cabinet picks and also the Powell comments on strong economic data, pushing forth delays in further interest rate cuts. So the markets did not like those events and sold off dramatically. Biggest losers were small caps, but pretty much across the board, everything fell and interest rates rose, which is also why you see the core US aggregate bond index also down. So not a good week last week. Turning to the Magnificent Seven, the leaders for the year, unfortunately, they took it hard on the chin as well, selling off in unison, as you can see here. Turning to the sector performance, only financials and energy and utilities were up slightly for the week. The biggest loser was the healthcare sector, down 5.55%, largely led by the selection of RFK Jr. For Trump's cabinet pick for HHS. And RFK Jr. quickly announced that he'd be going after the vaccine companies, and he also called for a hiatus or pause in new drug development, with the exception of drug development for long-term chronic diseases. So the healthcare stocks certainly did not like that selection of RFK Jr. And there'll be a lot of examination as to whether or not that's the right choice. And also similarly, the selection of Matt Gaetz for Attorney General will also be something that we'll be hearing quite a bit about over the next few weeks. Whether or not both these candidates get affirmed remains to be seen. That's going to be probably front page headlines, comments, and debates, pretty much from both sides of the political aisle, Republican and Democrat, for the next several weeks. So we'll be watching and trying to see what happens there. This is a short-term graph of the S&P 500 index after the election, and you can see the strong rally we had, which kind of peaked, and now the S&P looks like it's heading down. This is the one-year chart of the S&P 500 index, and as you can see, with the recent turn, we have now breached the 10-day moving average, which has been a pretty good indicator for the market direction near term, and being below that is a negative. The RSI at the bottom, let me move my face here. You can see the RSI, which had been in overbought territory, has now turned down. So it's no longer overbought. It's come back closer to center. But usually when you see these dramatic swings in the past, we go from overbought to oversold. So we're clearly heading down in that direction according to technical indicators. Turning to the 10-year Treasury yield, which continues to go up for the week, the 10-year Treasury yield ended at 4.43%, increasing 14 basis points from the prior week, and is now up 55 basis points year to date. The yield curve also, the blue line represents the yield curve ending last week. We clearly see that it's shifting higher across almost all maturities from last week and also from the end of the third quarter. So dramatic increase in the yield curve, and that should have a dampening effect on economic activity, which we haven't seen it in the data yet, but it's likely that we should see some moderating effects from liquidity squeeze and higher interest rates. The interesting data point we're looking for this week is NVIDIA's earnings, as we mentioned, and I want to roll back to a year ago, just prior to NVIDIA reporting earnings. They reported earnings on the 21st of 2023, and this year NVIDIA is reporting earnings on the 20th of 2024. But you can clearly see the red dashed line was NVIDIA last year, and it was clearly coming down. The market was, S&P in green was kind of flattish, but after they reported earnings, the markets took off and had a very strong rally through year end. So word of caution for those who are trying to time it, despite the question marks and concerns over macro and political events occurring, all it takes is one solid number and outlook from the bellwether leader of the year in NVIDIA, and we could be off to the races and running. And I do want to point out that NVIDIA had launched their next generation Blackwell GPU chip in the third quarter, and we expect dramatic rollout and increases going forward into 2025 for the Blackwell chip, with some estimates suggesting that NVIDIA earnings could be growing 50% in 2025 versus 2024. If that is the case and they reaffirm that outlook, we can expect NVIDIA to rise solidly, and hopefully that will lift the S&P 500 again, as it did last year. So I would caution people trying to time the market and be too negative here. There's still some good news potentially ahead, and we don't want to be out of the market. We'd rather see what happens here, because economic data is still solid. It's just the Fed is not going to weaken interest rates anytime soon, but you have to remember they did cut Fed funds rates by 75 basis points in the last two rate cuts. One that began it was a 50 basis point cut, followed by a 25 basis point cut earlier this month. So a pause should be expected, and I would not be out of the market. I would wait for hopefully good news. But if the news is bad, you can probably expect markets, investors to sell off. So for most investors, having some dry powder is probably a good idea. It's always good to buy after the good news, but also have a position expecting good news. So that's kind of our thoughts on what might be happening this week. And we also want to mention, meanwhile, back in Omaha, Warren Buffett and Berkshire Hathaway, they're sitting on $325 billion in cash. So obviously, his timing decision to raise cash over the last 9 quarters has been bad. But if we do start selling off, you have to remember one of the greatest investors in the world is ready to buy, and he's got the dry powder. So as long-term investors, we would recommend investors look for the opportunities, have some dry powder like Warren Buffett does, and look for great opportunities. So, and with that, we will close out our week's comments. And we welcome any viewers and clients and potential clients to reach out to us. We love to talk to investors and our clients, and you can contact me at my email address listed here, or Jim Monahan, our COO. And our website is AmericaFirst.fund. So thank you everyone for tuning in this week, the week before Thanksgiving, and we hope everyone's out there planning a joyful and healthy celebration with their family next week for the Thanksgiving holiday. So looking forward to touch base with you again next Monday. And thanks for tuning in. Have a wonderful week. Take care.